Okay, hi everyone. It's going to be the second lecture here for chapter 4. We go through here, let's pick it up. We are talking about dependence, right? So when we talk about dependence, we're saying someone is dependent upon another person. So, hey, my little niece or nephew, they're dependent on their mom or dad to take care of them. That's kind of a colloquial word of dependent. In tax, right, that kind of general principle of caring for someone else or taking care of them comes into play, but we're going to have very specific rules. And why we care about dependents, right? Well, formally, you could get a deduction for them. There was this thing called a personal exemption, and you could get it for dependents. They killed that with the Tax Cuts and Jobs Act, but we still care about dependents for two reasons. Namely, one, it's going to affect our filing status. You can only be and file certain ways if you have a dependent. And two, dependents help us qualify for certain tax credits. By way of example, the big one here, the child tax credit, right? If you want to get that $1,000, $2,000 for your child, for the child tax credit, they need to be your dependent. So the idea here with a dependent is you kind of have to meet three things. You have to be a U.S. citizen or a resident of U.S., Canada, or Mexico. You must not file a joint return, small exception there. And then the dependent, right, like the niece, the nephew, your child, they have to be considered a qualifying child or a qualifying relative. So in other words, the kid, right, they got to meet all of these criteria. The big thing here is really the test you need to know: qualifying child and qualifying relative. A little piece there at the bottom, just be aware of this, is hey, if someone claims you as a dependent, then you are not allowed to claim anyone else as a dependent. So this is where you would see it on the 1040, the dependencies or the dependent items down there, right? You'd list the kid's name, the social security number, relationship. You can see, right, this is the big thing we're going for, that child tax credit. You get that for qualifying children. You get this guy over here for the credit for other dependents. We'll learn about that in another chapter, but this is the big hitter with it, why we care about it down here for the credits. And then up here, right, if you want to be certain filing statuses, you have to have a dependent. So let's look at this, right? We have Homer. We're going to look at Maggie being a qualifying child, meeting that test, and then Grandpa being a qualifying relative, right? So you can look at it here. You have filing status, age, residency, relationship, support for a qualifying child. And then for qualifying relative, you have to have filing status, income, relationship, and support. So let's start here with qualifying child, right? We're going to break these out, each one of these kind of elements. So Homer, right, he's trying to claim Maggie as a qualifying child because he wants that credit for her, right? What does he have to meet? What is the criteria here? Well, we're going to be looking at Maggie here, and first with the filing status, right, we said up front, she can't have a joint return, okay? Next, Maggie has to be the right age, right? Uh, Generally going to be 0 to 18. However, if you're between 19 and 23 and you're a full-time student, you meet the age requirement. So a lot of you guys, if you're in college, this is how your parents claim you. Further, if you're disabled, right, you're always going to meet the age test. So this is a way they help people with disabilities. Next criteria, residency, right? So the idea with this is Maggie, right? She must have had the same principal residence as Homer for more than half of the year. And if she were to be away at school, like maybe your parents live in another state, you go to school here, right? When you're away at school, that counts towards that 6-month residency test. Next up is relationship, right? It has to be a child or a descendant of a child. For example, a grandchild. They can be natural, adopted, or a step or foster child, right? So when we say descendant, we mean we're descending, we're going down, right? So it can be your kid or the kid of your kid. Likewise, right? It can be your sibling, right? Your sister, your brother, or a descendant of their sibling, right? Like your niece, your nephew. So you can see, right, I tried to draw it out a little bit here, a visual if you're a visual learner. One thing here is cousin does not meet the relationship test. So interestingly, your brother can be a qualifying child, but your cousin can't. All right, next up, support. In this case, right, we're looking through Maggie's eyeballs here, right? The qualifying child must not provide more than half of his or her own support. So things like food, clothing, recreation, right? We're looking from Maggie's point of view. Hey, when I'm Maggie, I'm looking out those eyeballs. Did I provide more than half of my own support? If yes, Homer can't claim me as a qualifying child. If no, he can. Assuming the other criteria are met, of course. So let's look here at 4.6. They're giving us some information. We have husband and wife. They have one kid who's 12 who lives at home, another kid who's 21 away at school and makes $9,000 in income. Neither of them provide more than half of their own support. Are the kids, right, kid 1 and kid 2, qualifying children? Well, if we run through these here, right, neither of them file a joint return. That's good. They both are meeting the age requirement here, right? They're over 18, but they're a full-time student. 0 to 23, full-time student, you're good. Residency, yeah, the 12-year-old, they live there all year. While this person's away at college, it counts. Relationship, meet it. And then support, they're telling us right here, right? So in order to claim them as a qualifying child, you have to meet all 5 elements, right? If you were to fail one of the elements, right, you failed that one, you failed this one, you don't get to claim them. It's an all or nothing proposition. So this is giving you some kind of variations on it. You can pause and read this if you want, but let's go back into the lecture here. The next question becomes, right, we said, hey, there's a qualifying child. What happens if multiple people can claim that qualifying child, right? In other words, they meet the test and there's multiple people who do it. So by way of example, right, it's Full House, right? If you know that show, there's like little baby Michelle. Technically, right, if Danny were to look at Michelle, if Jesse were to look at Michelle, if Joey were, and they applied that qualifying child test, all of them could say, hey, I can claim baby Michelle as the qualifying child. Here's the situation though, who wins, right? All 3 of them are saying, she's mine. I want the $2,000. I want the $2,000. Well, here's the qualifying child tiebreaker rules. That's what's going on here, right? So if it's a parent versus a non-parent, right, like Danny, the parent of Michelle, versus Joey, the parent's going to win. If it's between 2 parents, right, maybe they're divorced and they both like take care of the kid, the parent with the longer residency with the child wins. In other words, who the kid lives with more wins. If it's between non-parents, right, so we had Joey and Jesse and they're both fighting over baby Michelle, the one who has the higher AGI is going to win. All right, the next thing here is qualifying relative. So if you don't get in the front door to be a dependent as a qualifying child, you always want to check and see, hey, can we get in the back door? Can we claim them as a qualifying relative? So with this, again, we have some elements here we have to look at. So filing status, no joint return, income, right? The qualifying relative, their gross taxable income for the year must be less than $4,700, right? So, hey, grandpa, he makes $5,000 from a job. We don't, he fails the test. In distinction, grandpa gets $5,000 of muni bond interest income. Well, that's $0. That's not taxable, so he would pass the test, right? So you got to be aware of those kind of twists and turns. Next thing here is the relationship, right? This is broader, right? You can see there's kind of more spokes sticking out in this. So it's going to include a descendant, right? We're going down. It's going to include an ancestor. You go up. It's going to include a sibling, a son or daughter, so niece or nephew, aunt or uncle, right? Again, the cousin doesn't meet the relationship test from this little prong. However, here's kind of the interesting thing, right? It can be you can meet this relationship test if you live with the taxpayer Homer for the entire year. So in other words, if you don't meet this, right, Milhouse, he's not related to Homer in any way. Homer, he still meets the relationship test if he lives with Homer for the whole year. So that's a little bit tricky, right? It's kind of like up here, you can have $5,000, but you pass the income test, right? But it's got to be muni bond. Here, you can have somebody who's not even related to you, like anybody, even a cousin down here. And if they live with you for the entire year, they meet the relationship test. So these are the twists and turns. The next one here is the support test. And be aware, this is a different support test from the qualifying child. It's not the same. They look the same, but it's different. Here, we're looking at a Homer's eyeballs, right? We're not looking at a Maggie's eyeballs. We're looking from Homer's, the taxpayer's perspective. And we're saying, hey, did Homer affirmatively provide more than half of the support for Maggie or Grandpa, right? So let's look at 4.8 and 4.9 to give this some items here. All right, so we got the two kids again, right? It looks like the one kid's 25 years old and a full-time student, doesn't live with the parents. And then it says, looks like the kid gets $3,000 from a summer job, and the parents provide more than half of the support. Is the kid a dependent, right? Well, the idea with this is you'd say, hey, they're 25, so they're not going to pass the qualifying child rule, right? So if we go back to qualifying child, right, it's only 19 to 23. So we fail the age test here. Sorry, can't do that. Can we go through the back door for qualifying relative? Right, well, in this case, we can, right? The kid, they're not filing a joint return. Their income is below 4,700, right? They only make $3,000. They meet the relationship test, and the facts indicate that the parents provide more than half of the kid's support. So there we go. We didn't get qualifying child, but we do get qualifying relative. Let's look at 4.9, right? Here's some other kind of twists and turns on this. All right, so we have a taxpayer with gross income of $42,000, right? We'll just say this is a brother. Then we have husband and wife, and brother is living with husband and wife, right? The brother, right? His total support, right? In order to support him, he pays $14,000, and husband and wife pay $8,000, right? So all in, his total support, 8 plus 14 is 22. If we, right, we have brother, he's living with us, right? We have him there. He's our brother. We got to let him live with us. Can we claim him as a qualifying relative? Right? Well, he doesn't file a joint return. That's good. He's going to fail, though, the income test, right? He makes $42,000. That's well above 4,700. He meets the relationship test, but he also fails the support test, right? And what we mean by this is his total support was $22,000. We paid $8,000. That is not more than half of his total support. In other words, what you do is figure out his total support, $22,000, divide that in half, 11. Did we pay more than 11? No, we paid 8. We did not, accordingly, provide more than half of his support. We fail that test. Change the facts here, right? They're saying, hey, what happens if it was $5,000 of tax-exempt income? That fixes this problem of the income, but it still doesn't fix the support, right? If you fail one element, you fail the entire test. You can look down, at these other ones at your own time. So I'm just giving you kind of the high-level items for these lectures. The next thing here for the multiple support agreement, you can read this on your own time. I'm not as concerned as the deep dive on this. This is when multiple people are supporting the same person. How do you kind of do this? If nobody qualifies, they can kind of make an agreement to let somebody qualify, assuming certain criteria are satisfied. All right, let's move on to filing status, right? So The idea with this is we talked about dependents. Now we're moving up to filing status. You have 5 different types: married filing jointly, married filing separately, qualifying widow or widower, now known as qualifying surviving spouse on the return, single, and head of household. So why do we care about filing status? Well, it's going to help us determine the tax rate that gets applied. It's going to help us determine our standard deduction, right? So if you're single, you get roughly $14,000 for a standard deduction. If you're married and you're filing jointly, your standard deduction is like $28,000. It doubles. And also, we care about it because there's certain tax benefits, namely deductions and credits, where they phase in, they phase out. You could qualify, you could not qualify based on your filing status. So it comes into play, it touches and concerns almost everything. We need to look at your filing status to determine other tax attributes on the form. So starting point here, right? It's going to be married filing jointly. This is generally going to be the best filing status in the sense it gives the most attributes. It's not as generous as people think, right? Like sometimes you may hear people say, oh, there's tax benefits to getting married. Yes and no. Like a lot of times when you run the numbers on this, if the 2 people filed single and you compare that with them filing jointly, there's not really a difference, right? It's like marginal. It's not enough to actually encourage people to marry. In any event, what do we do here? We look to the end of the year. So let me kind of draw this out. Right? So if you're married at the end of the year, then we're going to treat it, right, like you're married for the entire year. So that's the test, right? If you're married at 12/31, hey, you're married for the entire year. The exception, right, if your spouse dies during the year, right, and then we look at the end of the year, technically you're not married, right, if you look there. We have an exception for that. The exception says if your spouse in the year of death of the spouse will still let you married filing jointly for that year. So that's the idea here. General rule, look to the end of the year. If your spouse dies for that year only, you're still MFJ. Generally, best benefits there with MFJ, right? In distinction, right, we have married filing separately. This is essentially where each spouse reports their income and deductions for themselves. And I'll go to this, but let me draw another item here. So why would you do married filing separately? Well, there's really 2 kind of classical scenarios. One is where you have, a spouse that has like a lot of income and the other spouse doesn't. There's like disparate income and you want to shield the liability. The other reason you would do it like in real life is like you're divorced and you're like having trouble with your ex and you're just going to file separately. It's easier. Here's like from the liability perspective, right? Let's say you have a husband and wife, right? Husband makes, 100,000 and wife makes 200,000, right? That's their income. They file a joint return where they report all of that and they owe on that, I don't know, let's just say 125, right? That's their tax liability. The idea with this is when you file MFJ, right, married filing jointly, this 125, it's joint and several liability. In other words, they can go to husband and say, husband, you're liable for all of this. Pay us the 125. Wife, you're liable for all of this. Pay us the 125. So a situation, right, where you might not want this is where you would file separately, right? So if we change the facts, right, say you have husband, he makes $0, right? He's a YouTuber, and you have wife who's a CPA and doing great. She makes $100,000. right? You might not want to file together because if you owe like 20 grand, they can come after husband for all of that. So what you do is, right, husband files his return. He has a $0 tax liability. Wife files her return. She has a $20,000 tax liability. If they go after wife for the 20 grand, they can only go after her. In other words, you can't mix and match here. If you file separately, they can't be like, hey, husband, you owe the 20 grand. No, that would be wrong, right? We're filing separately here. Me, husband, I'm only liable for what I owe from my income and deductions. Don't, put wife on me. So that's the typical scenario with it. The other thing too to be aware of, if you do file separately, if one spouse itemizes, the other spouse must itemize. If one spouse takes the standard deduction, the other spouse must take the standard deduction. You can't mix and match. They don't want people kind of gaming the system by shifting all of the deductions to one of them. All right, the next rule here is the abandoned spouse rule. And the idea with this is, hey, you're technically married at year end, right? You're married, but we're going to treat you like you're unmarried and let you file head of household. Why do they do this, right? So if we read the situation here, it says, in certain instances, individuals may be married at the end of the year, right? You're technically married, but you're living apart. So one spouse abandoned another. In this case, right, the person who was abandoned, they might not want to file MFJ because they don't want to be liable for the other portion, like the other person's taxes, right? Like, I don't want to be on the hook for the guy who just left me or the girl who just left me, their tax liability. In these situations, right, assuming we meet this criteria, we can file head of household, the person who was abandoned. And the criteria here is the taxpayer is married at year end, right, up there. They do not file a joint return. They pay more than half the costs of maintaining a home for the entire year. And this home is the principal residence for a dependent child. So when they say dependent, right, qualifying child, and the taxpayer lived apart from each other for the last 6 months. So basically the idea with this is, hey, you are married. You have kids with your husband or wife. Your significant other leaves you in January, February, March, right? There needs to be a 6-month period there. Even though you're married, at the end of the year, you can file unmarried, be treated unmarried, and file head of household. All right, next one here. Qualifying widow or widower. So this is now known as qualifying surviving spouse. You could see either kind of name on the exam. But the idea with this is, that's why I have Kurt Cobain, right? If you don't know him, he's like the lead singer of Nirvana. He was in the 90s. Unfortunately, right, he killed himself. And then he left Courtney Love with a little baby. So the idea with this is we have filing statuses that try to help people in these situations through tax laws and rules. So the idea with this is, when there was somebody who was previously married, their spouse died, and they still have dependents, we'll let them file qualifying widow or widower. It has some advantages over like head of household and filing single. It gives you like a little better tax rates, right? We're going to try to help you out on the tax return. And how this works, right, if we were to draw it out, right, so here we are, we'll have year 1, year 2, year 3, year 4. So the idea with this is, in the year of the death, assuming no remarriage, you can do married filing jointly. For the next 2 years, you can be qualifying widower, assuming 1, you don't remarry, 2, you pay over half the cost of maintaining a house for a dependent child that lives with them for the entire year. So the idea with this is, year 1, your spouse dies, right? We said the exception to the general rule here is the end of the year. You're not married, but your spouse dies. The year of death, you're MFJ. The next 2 years, right, assuming you meet these criteria, right, there's like a kid involved, and you're maintaining the household, you don't remarry, right, you're going to be qualifying widower, surviving spouse, or qualifying widow. And then afterwards, right, you don't get this forever, right? If your husband or wife passes away, they don't like let you forever do this. Afterwards, in year 4, normally what it is head of household, but it could be like single. It depends on if the kid is like what their age is, if you're still taking care of them, things like that. But that's the framework with this. Okay, next filing status is single, right? We got Selena Gomez over here. I think she sings a song about being single. And if you're single, that's fine. It's not that big of a deal. It's like I was single for a long time in my life. It's okay if you're single. I think it's like important somebody tells you that. It's not like the movies where everybody's perfect and happy and you have to be in a relationship. It's okay if you're single, right? And for some people, it's better to be single. Other people want to be in a relationship. That's great. It doesn't mean there's like one way to live a life. The idea with this is, hey, you don't meet those other criteria. You can file single. And the idea with this is, be aware, if you have a boyfriend or girlfriend, you still file single, right? You can be Instagram official, but you still file single. So unless and until you marry, you're still single unless you meet one of these other kind of filing statuses. Again, another twist and turn. Last, filing status here is head of household, right? And the way you can think of this, right, it's generally going to be the single parent, right? Somebody who's divorced, or they're taking care of their kids and they're a single parent. It could also be somebody who's single, who's taking care of their direct parent. So it doesn't necessarily have to be kids. So what's the idea here? Well, as an overview, right, from like best to worst, you got MFJ, qualifying widower, head of household, single, and married filing separately. This is like the preference for like where do you get the best to the worst tax rates and the benefits and things like that. To qualify for head of household, right, which is essentially a single parent or somebody who's single that's taking care of another. You're the head of a household. You have to, 1, be unmarried at the end of the year, right? So this was, if you remember that abandoned spouse, we're going to treat you as unmarried to file head of household. 2, you can't be a qualifying widower. 3, you must pay more than half of the cost of keeping up a home for the year. And 4, you must have a qualifying person, right? So this is a different test than qualifying child or qualifying relative. It's more strict. Essentially what it is somebody who's a dependent relative who must live with you for more than 6 months during the year, or it's a dependent parent who does not have to live with you for the entire year. In this way, right, you can't get in, right? If you remember Milhouse before, you just lived with them for the entire year and you got them as a qualifying relative. You can't do that for qualifying person, right? It really does have to be a relative, somebody who's related to you. So you can look here, right? I added to this. What is a qualifying person? You don't need to know, right, all of these exact details, but this is the thing where I was showing you with the Milhouse. Let me see where I can find it. So they're a qualifying relative other than your father or mother. He or she isn't related to you in one of the ways listed above and is your qualifying relative only because they live with you. That's not a qualifying person. So, right, that's the idea with Milhouse here. This is the other things, right? You can get them through qualifying child, right? That's one way where you can get it, right? But you got to be single. Or a qualifying person can be a qualifying relative if they're your mother or father, or this situation right here. You can read through that once, right? And just look at it. But that's the idea. I'm going to end the lecture here.